Hey traders, welcome back to the Gain Trade channel. My name is Mike Sir. Today, I'm going to share with you how to select the best pair of stocks to trade and the process that I go through to find the best combination of stocks that will result in the biggest profit. Make sure you stay until the end as I will give you several examples of the best pairs to trade. But before we dive in, don't forget to hit that subscribe button and ring the notification bell so you never miss a video from us. Now let's get started. First off, for those new to pair trading, let's quickly understand what it is. Now pair trading, specifically in stocks, involves simultaneously buying one stock while selling another stock that is related in some way, regardless of the overall market direction. The objective is to profit from the relative price performance of the two stocks rather than try to forecast the future direction of each individual stock. Now, the approach that you would take is to find two stocks where their prices historically move in the same direction or generally move together at the same time, but at the current moment, their prices deviate from their average price difference. Now, such deviations can arise from temporary market irregularities or external influences that temporarily strengthen or weaken one stock relative to another. Now, the first step in selecting the pair of stocks to trade is to look for a high correlation between the two stocks, and you can look for several factors. The most obvious one is the two company stocks are both in the same industry or direct competitors to each other and therefore impacted by similar market forces such as change in the demand and supply for their goods and services or simply industry-specific news. Now, another factor is geographical location, where both companies are located in the same country or even same city and are affected by changes in the government policies, economic conditions, or even events that are specific to that region. Another factor is market capitalization, where both companies are similar in size and therefore may have similar growth prospects and challenges. For example, smaller cap companies may experience faster growth, while larger cap companies might have more stability but slower growth. Lastly, one more important factor is when both company stocks or holdings within a stock market index, let's just say for example like the S&P 500 or NASDAQ 100 index, they tend to follow the overall market direction of the indices, and especially when the stocks have similar weightings to each other in the index. Therefore, changes in these indices can affect the prices of these stocks. Once you have identified a list of potential stock pairs to trade, it's time to assess each stock in the pair and utilize technical analysis. Now, this will involve studying the financial statements, quarterly earnings reports, company-specific news, and industry trends of both stocks in the pair. The goal is to compare the fundamental attributes of both stocks comprehensively and identify the strengths and weaknesses in each stock's fundamentals. Based on your analysis, you can then determine which stock appears to be the stronger or undervalued candidate for the long position and which one seems relatively weaker or overvalued for the short position. The next part is to look at the price charts of each stock and utilize technical analysis. This will involve looking at technical indicators such as the RSI, which allows you to identify oversold conditions of a stock to buy, as well as overbought conditions of a stock to sell. Another indicator is to ensure that there is sufficient trading volume in each stock, so it makes it easier for you to enter and exit positions without significant price slippages. In addition, one very important tool to determine how correlated two stocks are is by calculating the correlation coefficient. This is a statistical measure ranging from -1 to +1 that's used to quantify the degree to which two stocks move in relation to each other. A positive correlation is a measure greater than 0, and it indicates a direct or positive relationship between the two stocks. This means that when one stock's price goes up, the other stock price tends to go up as well. A correlation coefficient of +1 suggests a perfect positive correlation, meaning the two stocks move in perfect unison. Now, a correlation coefficient close to 0 or exactly 0 means that there's no correlation at all, while a correlation coefficient below 0 or negative suggests an inverse or negative relationship between the two stocks. This means that when one stock's price goes up, the other stock price tends to go down or in the opposite direction. Now, you can use online tools such as buyupside.com to determine the correlation coefficient of stocks. So let me go through an example with you on how we go about selecting pairs to trade. In this example, I'm going to choose a pair of stocks that are in the same oil industry and are directly impacted by the price of oil. These two are the largest oil companies in the US by market capitalization, with ExxonMobil ranked number 1 and Chevron ranked number 2. Also, these two companies are the two most heavily weighted stocks within the oil sector index ETF, symbol XLE. In addition, these two company stocks are heavily correlated in terms of their price performance. Over a 5-year period, they have a correlation coefficient of 0.9716, which means that they have an almost perfect positive correlation to each other. Therefore, what I'll be looking for is when Exxon and Chevron stock prices diverge from each other, then there's a high probability that they will revert back to its correlated mean. Now let's use the bot builder to put on this trade. Now here you can see below the chart of Exxon and Chevron and how their stock prices generally move in the same direction. Now we ran the AI bot to look for divergences and execute the trades for us over a 1-year time period. And you can see from the green arrows that this is when they start to diverge from each other, and this presents an opportunity for a pair trade. In fact, the AI bot executed 4 trades that all became profits for us. The total net profit was $132.25, and the average profit per trade was $33.06. The total return was 5.55% and a position size of a little over $2,000 per trade. Now, generally with highly correlated pairs, you won't get a lot of pair trades, but the success ratio tends to be much higher. Selecting the best stock pairs to trade involves a combination of filtering for correlation, in-depth analysis, and strategy. But make sure you remember to continuously monitor your pairs and adapt to changing market conditions. Thanks for watching. If you found this video helpful, please give it a thumbs up and hit the subscribe button below for more trading tips and strategies. Also, don't forget to leave your questions and comments below. We love hearing from you. I'll see you all in the next video.